Okay, everybody. Welcome to the weekly update for October 2020. Uh, Due to some logistical issues we got going on this weekend, Conan and I cannot both be in the same place at the same time. So you just get me, unfortunately for you guys, but that's the way it goes. All right. Basically, how we do this when we can't be both together in the podcast studio, wherever I'm at, I record the presentation in a Zoom call and then send it over to him, and he puts it up on Facebook and YouTube. So this is the first time we've done this since we started up the YouTube channel. So we'll see how it goes. All right. Weekly update for October 2020. The safest way to double your money is to fold it in half and put it in your back pocket, says Ken Hubbard. Ken Hubbard, born in 1868, died in 1930, was an American cartoonist, humorist, and journalist. So this quote definitely goes to the idea of safety and risk. Obviously, folding your money in half doesn't double its value, but putting it in your back pocket does ensure that it stays safe. So the bottom line of this, you can't make gains without taking some level of risk. That's just the way it goes. Okay. It was one heck of a week on the market. Tuesday, we had the first presidential debate, followed seemingly immediately by the president and first lady being diagnosed with COVID on Friday. If anybody was up early Friday morning, I guess the announcement came out about 1 a.m. East Coast time, and the futures markets were absolutely tanked. They recovered, so the market opened low on Friday, but recovered really quickly for some pretty minimal losses from most of the indexes. The NASDAQ got hammered pretty good. Tech actually got hammered pretty good on Friday. NASDAQ was down about 2.2%. The S fund, which tracks closer to the Russell 2000 than the NASDAQ, actually staged a really big reversal on Friday and finished a little bit down for the day, but it was above its 10-day and 50-day moving average. It was definitely the best reversal of the three stock funds. The iFund chart is not looking good. We'll take a look at that. It gapped down below its support and resistance line back in mid-September, and it's been fighting to get back above it ever since, and it's not there yet. So also the technical indicators at the bottom of the chart on the iFund don't look that good, but we'll take a look. Amazingly, though, given what's been going on, and especially with the news of the president getting COVID-19, the markets have held up extremely well, and they're staying above those key support levels. We got the 10-day and the 50-day kind of very close together at this point, and right now the C fund, we're going to get to it, but the C fund is right in the middle between the 10-day and 50-day moving average. So again, Friday's positive reversal days is a pretty serious sign of market strength. So before we get to the charts, I've had a couple of people in the group post articles from Investors Business Daily. If you really want to learn how the market works, Investors Business Daily is one of the best newspapers you can read. I've been reading it every day for probably 15 years. There's so much good stuff in there, and it's about investing mindset. It obviously gives you the daily data on everything, and U.S. markets and foreign markets and all that. But what we're going to talk about today a little bit is a very simple investment strategy that IBD, they have a lot of offerings out, as you would imagine, in a newspaper, but they have an algorithm that will recommend when it doesn't recommend, it tells you when they think the market is in correction, under pressure, or in an uptrend. Okay, so those are their three levels basically. Either the market's in an uptrend, a confirmed uptrend, it's market under pressure, or it's market in correction. And so what they came up with, they call it, buy a market index ETF. Okay, that's based on the section in Investors Business Daily called Market Pulse. So the way it works is very simple. If Market Pulse says that the market is in a confirmed uptrend, you would be, in this case, they're talking about the QQQ, which is the NASDAQ index. Okay. So if you are 100% invested in the NASDAQ index, every time that IBD, Investors Business Daily, every day that Investors Business Daily called the market in a confirmed uptrend, if you were 50% invested in the QQQs when the market is under pressure, and if you were completely out of the QQQs, so for us, you'd be in the G fund, if the market's in correction. Okay, so very simple. Here's what your performance would have looked like versus the NASDAQ and the S&P 500. So what you can see is, this is the IBD index right here. What happens is you don't get as big a losses. The methodology that they use, sort of exactly what we're trying to do here, which is why I read it all the time. It's one of the tools in my toolbox. It minimizes downside risk. So you can see here on the NASDAQ, you got some pretty big up and down movements there in 15 and 16. You got a really big move here, right, as we recall at the end of 18. And you get this giant move here, right? If you compare that, though, to the IBD index, especially the difference between the drawdown in the NASDAQ versus the drawdown on the IBD. So drawdown meaning how much you would have lost. So I don't know what it is, what the percentage is right here. So this is the drawdown, right? This is what you had here, and the value of it down here would be the drawdown, and it's obviously a huge loss. But if you were following the IBD index and you got out when IBD said that the market's in correction and got back in when it said market's back in a new uptrend, your drawdown would only be that much. So you can kind of tell why it's one of the tools in my toolbox. It maintains a little bit of stability, it minimizes downside risk, and tries to maximize upside gains. It's not TSP specific. It's much more volatile than what we use, because the NASDAQ by definition is more volatile. And this is just an example of one way you could use it against the NASDAQ index. But a lot of people out there were asking me how you can use sort of market timing for investing outside of TSP. And this is one really, really simple way to do it. You have to buy Investors Business Daily, buy a subscription to it. And like every other kind of methodology, it's not right 100% of the time. But when you look at this chart, I think it's pretty clear if you want to maximize upside while minimizing downside risk, this is a pretty good way to do it. Definitely keep in mind, if you're going to use this kind of methodology outside of TSP, if you use it in any retirement fund, you're good, meaning you won't have to pay taxes on the gains every time you make a trade. Which is short-term capital gains, because we don't accrue short-term capital gains in retirement accounts, which is TSP, or a 401k or an IRA. But if you use a taxable account and you trade a lot of your gains will get eaten up by taxes. So just something to keep in mind. Okay, if you guys have questions about that, definitely hit us up on Facebook or Twitter or email or whatever. All right, so what do we look like this week? A lot of good information here in the C Fund. We're going to look at, this is the 9-month daily. We're going to zoom in here in a minute and look at the 3-month daily, just to give you kind of a little more detailed perspective of it. But we definitely have a low here that's in place. Whether or not that low stays in place, you'll recall, I think it was last weekend, I was looking at this and I put up a chart that showed every time the market broke below the 50-day moving average, right here, it always came down and touched the 200-day moving average, right here. So since all the way back to, I think I did 2016. So I'm actually sort of anticipating that the market continues down and touches the 200-day moving average. Having said that, what happened this week is that the market popped up and it's staying above its 10-day moving average. So it's still right in between the 10-day moving average and the 50-day moving average. If you were a subscriber to the site, you got the alert on the 1st of October. Go forward to the next chart, actually. Okay. You got the alert on the 1st of October, which was right here. And the reason the alert came out on that day to get us back a little bit into the stock funds was because the market was up that day on big volume right here and closed above the 50-day moving average. So you might say, well, why didn't we get back in right here? We had this huge price move up here, and then we had a gap up to right there. Why did we wait? Answer is because on this up day, which definitely was a big price move, the volume was about the same as the day before, but definitely not enough volume to support an actual breakout. So I gave it a day, and then the following day, we got a real breakout on the 1st of October. I mean, unfortunately for us, tactically, that's not great because we used our first move for the month on the 1st of October. It's about the worst tactical advantage you can be in, but nothing we can do about that. That's when the market, I respond to what the market tells me to do. So that was on Wednesday. Thursday, the market actually did really well. We came down, tested the 50-day moving average, moved higher, closed at the top of the day's, close to the top of the day's trading range. Everything was great until Friday morning when the news came out about the president having COVID-19. Now, having said that, Friday was not that bad of a day. The market opened right there at the bottom of that rectangle, came all the way down just to about the 10-day moving average, all the way up to the 50-day moving average, and then closed higher than it opened for the day, but down a little bit versus down quite a bit actually versus the prior day. So what does all that mean? Oh, and one more thing, the volume on Friday was actually not very big, right? It was about the same as it was on Thursday, but it was significantly lower than it was on our breakout day on Wednesday. So we also got the MACD here, which is positive now. Relative strength came down a bit, but I'm okay with these technicals. It kind of amazes me with news that the president got COVID that we are still being supported by the 10-day moving average, and we're still testing the upside of the 50-day moving average right there. It's possible that it rolls over, but it looks like the market wants to go higher from here. It really does. We shall see. Okay. The S fund, a really big reversal day here in the S fund. So the S fund opened right there, reversed higher and closed up here for the day. So it closed, it was off 0.18% for the day, but from when it opened to where it closed, it moved much higher, and it definitely found support at its 10-day moving average. So the S fund chart is looking really good, and if you draw the line, I mean we're in pretty good shape. We're outside of the downward channel. So very good possibility here that the market moves higher. Again, S fund is a pretty good chart right now. Technical indicators look really good. So yeah, this low here, this low is a little bit lower, but on the RSI, this low here is actually a little bit higher than this one, which is bullish. This MACD here is a little bit lower than this one, which is bullish. So again, I don't do crystal ball, but I'm pretty confident, pretty comfortable in our current allocation position. Okay, iFund, definitely the worst chart of the group. We get the support resistance line that's going all the way back to June 8th. You can see this is a great example. That line sort of bisects below and above that line. You can see the breakout here, where it finally got above the line, where the line as it was resistance here, resistance, and then here we had the breakout, right? And once it broke out, it stayed above it. Got support right there, support right there, support there, and then a big gap down. So that was a major problem. And ever since that gap down, it's been fighting to kind of get back above that resistance line, but hasn't been able to do it yet. So at this point, the 10-day moving average is angled down. Also, the overall trend of both the MACD and RSI is down. Not so good. So I'm a lot less optimistic in the iFund, or with respect to the iFund, than I am in the S and C funds, which is reflected in our current allocation. Okay. So this was a really quick one because I don't have content to ping questions off. So if you guys have anything, definitely email, Twitter. I know there's a lot of stuff going on with the site. We got the new site coming online. We're kind of running both sites simultaneously right now. So there are some people that are having problems logging in because we have a company that's porting all the information over. It should be resolved by the end of next week, goes well. And that's about it. All right. Have a great week. And we'll see you guys next weekend. Take care.